If you like this video, give it a thumbs up and hit the subscribe button to receive more like it in the future.
Who at his level still gets very excited about talking about businesses and talking about stocks. Very passionate about the markets. Madhu Kela is who I'm talking about. He's Chief Investment Strategist at Reliance Capital. Madhu, thanks very much for your time.
Thank you, Prashant.
Great to have you with us.
Yeah, good to hear.
So for our viewers who are investors, could be lay, could have a little bit of experience, and who are passionate about the markets, who want to learn, who want to make money, grow wealth, what's the mantra? I mean, if I can put it that way, what's your starting advice?
So the starting point, Prashant, is to recognize that from the outside it looks very easy to make money in the market, and in the hindsight it looks very easy that I should have bought this and then sold it at this price, and I should have bought in the market when it fell down. But it is only true in a hindsight. So this is a very skillful job. This is not you can't do it like in a part-time basis. You can't do it in a very casual manner. You can't, because it all involves money. And this is the only game which I know in town, which is not like 2 and 2 multiplied 2 will never be 4. It can be 8, 22, it can be 2, 0, whatever.
Okay.
So it's a very skillful job. So you have to decide, like if you are a investor and you are serious about investing your money, then you rather be very serious about learning this skill. If that is not the case, then of course there are enough number of people like us who are available, who have track records of 10, 15, 20 years. So you rather trust
is
them.
Be very serious.
Exactly.
It's not a
The other thing, at the onset I would say that all this tip business in the stock market, which is very popular, someone will give me the tip and I'll be able to buy it, and then that person will tell me 20 years of my investing career, tip never comes in time. And even if it comes, then I think you never know how to exit it.
Right.
And secondly, sometimes you buy it at 10 rupees, you goes to 15 rupees, 20 rupees, 3 times. You think it's all working. But it's the market which is working, not the tips.
Sure.
The moment the market stops working, then the tip stops working.
Sure.
So you have to be very, very, very about who you are listening to and what kind of a stake we are putting by listening to someone.
Okay. Madhu, how do you identify businesses that you think are, because that's the first step, right?
Yeah.
Identify, because you've got all these stocks which are listed and you can't study all of them.
Sure.
You narrow it down first and then spend your energy studying something in detail.
That's right.
How do you do that?
So it's been a lot of trial and errors, to be honest with you. When I began my career, because I come from a very difficult background, humble, basically coming from a village. So stock market was a new word for me.
Okay.
So in the initial stages, even I thought that it's so easy to make money here, that you can sit in an air-conditioned cabin, someone will give you a tip and you can buy and sell shares for doing nothing, you can make money. But that was the Harshad Mehta era in 91, 92, when making money was relatively easier. In that
Everything
sense.
was doing
So,
well.
to be honest, first few years went essentially searching as to what is it which is required. And then I was in a sales job, so I never actually did a lot of research in the early years.
Okay.
Then, as the years passed by, and as you experienced 2-3 cycles about the market, that you can lose money also here, and you can lose like 80%, 90%, 100% of your capital.
Right.
So then now we have our own way of working. So obviously, whenever you are wanting to, as you rightly said, whenever you are wanting to put a bet, first you want to see what sector does it belong to.
Right.
And do you have a view on the sector as a whole?
Okay.
So broadly we have a view on the sector. Like today, if you ask me to invest, for instance, in a steel company, I would have to then have a real time frame, have to look at the steel company's balance sheet very, very carefully, because the overall sector is not in favor. So if I'm investing something, I have to have maybe 3-year or a 5-year time frame.
So in a way, what you're saying is, before you go down to XYZ company,
Yeah.
You start with the sector.
Oh, yeah, broad understanding of the external opportunity is what I would say. Not even a sector. Broad understanding what the external.
The logic being, if, say, for example, steel, as you said, is in a very tough situation.
Yeah.
For any company to stand out and do very well,
Exactly.
will be difficult.
In the stock market, in the operations, you might be doing well. So this is a big difference.
Okay.
You know, operationally, you might still be doing well, and you may not be falling in terms of stock price. But for you to really do exceptionally well, the overall environment has to become good.
To change. Okay. Okay. So once you identify a sector,
Yeah.
Mostly how do you do it? I'm sure that you have a list of stocks that you track,
Sure.
right? I mean, it could be 100, 200 odd stocks. It's not the buy list.
Yeah.
It's not what you own, but you own stocks from these sectors from time to time.
No,
right?
I think I work it differently. So we are open to examine from the top 3,000 companies. It doesn't matter. You know, I'm willing to go into the smallest of micro cap if we see that there could be a real promise.
Okay.
So first cut is the sector itself.
Okay.
Then the second cut is once you go on a basic standard checklist on a company. You know, what is the promoter? What is the kind of businesses? What have they done in the last 3, 5, 10 years? What is the track record? Is there a real track record of a promoter? And plus, how profitable the business is. So let's say, am I willing to go in a small company which is in the pharmaceutical sector? The answer could be yes. But am I willing to go in a small company which is in a real estate sector? The answer will be no.
Okay. You won't even look at it?
I won't even look at it.
Okay.
Because I know the sector is difficult, and plus on top of it, a small company will be tough for him to ride on if it is debt ridden.
Okay.
Then so the number of assumptions which I have to make for that to succeed versus a pharma company to succeed are very, very different and are much higher. So once you do that, then you do your basic number crunching as to
just the basic test. I mean, how do you determine that, okay, this company is good or this company is just plain, I mean, for the lack of a better word, fraud? I mean, there are hundreds of companies, right?
Yeah.
Where investors have lost a lot of money.
So that is, Prashant, that comes from experience.
Okay.
That, you know, that comes from our understanding of the market, the number of people we know on the business side, on the analyst side, and from the market side. So basically, you talk to a couple of people that, you know, if you like a particular company.
Is there any way from numbers to determine whether okay, this is a company, for example, a company which pays taxes or pays dividends? I mean,
yeah, absolutely.
And
that's why we have differentiated a lot of places where the world will not go. I have gone there and we have made a lot of money, and vice versa, where a lot of people where the world will think that we are in a safe place, but the valuation not being in favor, it's been very disappointing.
Okay.
So I would say that, you know, personally, my approach is that I am not biased. And I think this is my biggest strength.
Okay.
That when I want to approach a particular thing, I don't approach it with a perspective that, you know, इसने तो बहुत खराब किया था, तो ये बहुत खराब ही आदमी है. That इसने बहुत अच्छा किया था, तो बहुत अच्छा आदमी. We're always willing to look afresh. We have to have your opinion, but the opinion has to be based on a fundamental, proper analysis of the situation today.
Okay.
So, coming back to your question, so when you start, you first want to understand what the management is all about. You know, because a very good company, very well run, but an absolute dealer management where there's no fire, there's no real understanding, there's no real ambition, you can be in a difficult spot.
Okay.
Similarly, an extremely aggressive management, you know, which has no sense for capital allocation, which has no sense for, you know, how much risk should you be taking in building a business. And a fantastic management, but you can be, again, get stuck. So you have to see, first is you make an assessment on the management.
Okay.
Second is you make an assessment on external opportunity. As you said, today I will be happy to look at an NBFC company because it's a very large space.
Okay.
And if the fundamentals are very good, we know that once the numbers come, whatever may be the perception of a management today, as the numbers come in, it will improve because it's a large business. But if I identify a good promoter in a very small business,
industry,
then it can remain value for a very long period.
Okay.
And vice versa, that, you know, if there is a small company which is available in a small business, but extremely promising promoter, then again there could be an opportunity there.
Okay. Okay. So that ties in with, you said, industry, right? I mean, the industry has to be large enough.
Yeah, industry has to be large enough,
opportunity.
or if it is not large enough industry, then the proposition has to be very, very compelling.
Okay. Small industry, but a player which is majority of the market.
For instance, microfinance. Okay. It's not a large listed industry today. Education. Okay. It's not a listed large industry today. Okay. But am I open to examining ideas from here? Yes. But it has to be very compelling. You know, versus, let's say, in a pharma company, I am sure that I am not going to get any pharma stock at a 5p multiple after the business is discovered so much. So we will be a little more lenient because it's a proven business, it's a proven business model, it's a proven track record of value creation in that business.